All right. Hello, everyone. Hello. Welcome to Mentor Sharing 2. Why startups fail, especially for early stage founders in Asia. So it's very good to have everyone dial in. Today we have two fantastic panelists who will be able to give you guys context based on their experiences and journeys to let you know what they have seen in startups who have been successful, but more importantly, the mistakes they have seen founders make at a very early stage in their journey. They're both mentors with Beyond 4, and they're both mentors that you can engage for ad hoc mentorship at a later stage if you guys feel that they would be able to help guide you on that journey. Let me introduce both our panelists for today. So, our first panelist is Mr. Shashank Awasti. Mr. Shashank Awasti is the co founder of Anissa Venture Capital, which is a unique venture capital fund that focuses on disability inclusion in Asia and Africa. Anissa aims to provide risk capital for startups working on disability inclusion in Asia and Africa. He's also the co-founder of Vishesh, an award-winning impact enterprise working in the area of disability inclusion. Vishesh assists persons with disabilities with access to high-quality training and jobs. Our second panelist is Mr. Michael Chung. Michael is the co-founder and CEO of Big Wheel, an ecosystem aimed at helping early-stage entrepreneurs scale up and build towards their visions. He is also currently the co-founder and CEO of Aerovision Asia, a drone tech company aiming to push the boundaries of technological innovation in the space. Gentlemen, it's a pleasure to have you as part of today's panel.
Thank you. It's a pleasure to be here.
Thank you. Pleasure to in the room.
All right. So maybe we can start today's conversation if you with the both of you just sharing with our founders a little bit about your entrepreneurial journey, how you got into entrepreneurship, and as ecosystem builders on different sides, Michael as an ecosystem builder and Shashank as a venture player. Maybe you could share a little bit about the current experience that you've had in terms of engaging with founders and what you've kind of seen. Maybe we could go with Shashank first.
Yeah. Thank you. It's a pleasure to be here. My request to the founders is please ask questions. Otherwise, people like me are very prone to keep on speaking without realizing what others may be looking for. So at least for me, I think please ask questions. But I'll tell you a little background. Like Nash already shared, I am part of a VC firm. I'm a co-founder of Anissa Venture Capital. This basically builds on our prior experience at a firm called Grey Ghost Ventures, which is one of the pioneers in impact investing. We've got investing experience in Asia and Africa. We invested in businesses that use tech or mobile for improving the quality of lives of people from low and middle income communities in emerging markets. We've been quite fortunate. I think one of the reasons for our good fortune reflected in the returns that we've delivered is that entrepreneurs working in the segments that we want to back don't have that many choices of investors. And also they don't come in there because there are too many investors chasing those sectors. So, social impact is not a theme that's just very exciting that a lot of people get, super enamored with as it happens with others. So we're quite fortunate. We worked in all kinds of different, we made investments in all kinds of different sectors, right from energy to pay-as-you-go mobile, all kinds of things. It's helped me understand how our prospective consumers, etc., look better. Of course, we've been very fortunate that we've lost money in fewer places than we've made money, thanks to the entrepreneurs that we have. But yeah, we've seen some risks materialize. Some risks that got navigated and managed well, and others that unfortunately the entrepreneurs couldn't. Some are relating to the firm, some relating to sectors, and some relating to extraneous factors as well. I'm happy to talk about them, but over to you, Michael, and then either we can take questions or whichever way that the founders would like this to work for them. Michael, over to you.
Michael, I think you're muted.
Yeah. Hi, good afternoon. It's a very hot afternoon today. So instead of staying out there using a drone, I'm staying in the room now. So thanks to Beyond 4, and also thanks to Professor Shah Sean, for the sharing. Michael, yeah, I was a project engineer in Singapore in Semicon, especially in IC chips machine maker for the past 10 years, and slowly transformed myself into this business industry. And very fortunately, has been invited by Alibaba Hangzhou to be the so-called organizer for this Alibaba Great Contest in the year of 2019, and chairman of Southeast Asia in 2021. So throughout the journey, actually, my dream, actually, not to say a dream, it's just my vision is to carry more startup and also SME to so-called more exposure for this with the region players, especially from China, Taiwan, India, Japan, and also in this Korea. So and also run quite a number of events, especially in this SME business coaching. And finally, I stepped into this agriculture during the year of COVID. I think everyone has gone through the COVID session. When everyone's trapped in the house, I'm one of the person who run in the farm. So I and my partners, two partners, starting to clear a jungle and also a so-called old palm tree, turn it into the so-called durian orchard, and also so-called timber forest, reforestation. And at the same time, actually, quite a number of so-called startup, especially in this agriculture, come to us to propose all kind of project, and also machine maker like a drone maker come to us to propose us the solution. So at that moment, actually, not to say struggle on the choosing, it's just that we are not ready. So because that time I'm focusing more towards on the groundwork on the plantation, because we have to turun padang first, then we know what facing on the ground, what facing on the earth. So from there, slowly until last year, there's a so-called approach from China, one of the pioneer and very focusing on this agriculture. The drone maker come to us, and we deciding to sign a contract to be a so-called assembly plant in Malaysia and Southeast Asia, and so distributorship in Malaysia, in the region. And we very fortunately, and we have so-called meet up with our Chief Minister of Malacca, and is very supporting on this. So so later on, we're going to share about this so-called the startup facing how to choose, how to kickstart, and how to sustain it. So I think that's all my introduction. Maybe if you want to know more, just come to my LinkedIn and just click me first. Yeah.
All right. Thanks, Michael. So let's start today with one key question. Yeah. And for any of the founders, if you have any questions, you can use the raise hand function and we will jump to you immediately after. Right. So please do take advantage of the two amazing panelists we have. But without further ado, here's the first question I want to pose to the panelists. Yeah. What are some of the common reasons startups fail within the first year? As an ecosystem builder, we see a bunch of different reasons, either being due to team dynamics, market dynamics. Sometimes it could be due to the founder approach. But from your experience, what are some of the examples that you've seen that founders could have prevented in order to continue running their startup, to continue taking advantage of their journey, but they just missed out, and that's kind of led to their failure? Maybe we can go with you first, Shashank.
Yeah. I think, while Nash, you've of course asked about what founders could have done, right? To me, I think in the earlier years, the locus of control is much lesser, right? Because one of the first things is that one has an idea about what they want to pursue, and it may not be ready for the market, or the market may not be ready for it. The idea may be our impression of the solution. And I think, I won't say it's failure, but I think that sometimes founders don't realize that you need to spend time with your consumers, right? And it's quite strange how, there's all this talk about user centricity, etc. And yet, founders end up pursuing opportunities that they think will make the difference or will serve the consumers. Having said that, I must say, unfortunately, the converse of what I'm saying is equally true, which is that not all consumers know what they could benefit from or what could be useful for them at whatever price points, etc. So if you are coming from a place saying that this is something completely new, then it's a different story. But most often the idea that this is a solution that will work for the consumers, I think, is the primary thing that, and I won't call it failure then. I would just say that it's validation of an idea that one is looking for. So it, to me, doesn't qualify in that. The other, of course, I think at all points in time, particularly in the early stage, cash flow is a thing, but I think we should spend a little more time about cash flows. But in the first year, I would say it's about being able to figure out the thesis that you have, the way that you want to deliver the product service, or the way you want people to interact with the platform that you're building. To me, that's the one that really stands out as something that is a go, no go to building a large business over time.
Got it. So I want to dig a little bit deeper into that, Shashank. So I think the key takeaway I hear is that, especially in the first year, a lot of startups fail because they're not able to validate their product or solution. In your experience, seeing those startups that have struggled to do that, was it an issue with maybe in certain situations, definitely maybe there was just not a market. But for those of the startups that were not able to discern whether there was a market, what were the mistakes in their approach of validating that they made, or what was their mindset that kind of led them to not be able to validate their value proposition?
So I think the process of validation has to be reasonable over a period of time and over a period of over a set of consumers. So you can't say that I'll do this one very deep validation and that will tell me or whatever else, right? So I would say initially the first stage is observe and not judge, right? And as founders, and I've founded a business that works in the area of disability inclusion, which is really, really far out, right? Which is where I think we attempted to build a service that consumers were not used to, because all people with disabilities are almost always served by charity, right? Not that it doesn't mean that they won't get good quality service, but the orientation is different or whatever. So I know what that feels like, but early on you got to go and say, here's how I'm thinking. This is what the service is. Does it deliver what you're looking for, right? I think there's one point. The second thing is, does it deliver? And then does it deliver in a way that works for you? And the final thing is, does it work at a price point that works for you? So you've got this great service and I can access it in a way that I want, but unfortunately the price point doesn't work for me, right? So each of these things can go off. The price point doesn't work, then is it something that you can with scale fix, right? Which is where VCs come in, because this is the risk capital that says that, okay, fine, at this scale it doesn't work, but at a certain scale it does. And this capital will help you go from A to B pretty quickly. The second thing is the product service platform by its nature works, but not the way that it works for me. I'll give you an example. For if you see financial services. So if you're looking at people from lower income communities in Asia in particular, microfinance has worked for them, right? So they need access to credit. That's very, very clear. But that credit must be delivered to them at doorstep, right? Because for a person to go and get that is a loss of pay and many other things, including the credit or the collateral, which is the social collateral in this case in microfinance. So just having this idea that, yeah, there is credit that's needed for people that don't have access to credit is not going to solve the problem unless it got delivered on doorstep, right? And at a point on the pricing scale where it worked for them. So each of these, if you didn't have, it will not work. So if you don't need the credit at all, there's no story, because it doesn't matter what your distribution is. But if you needed it, then you couldn't distribute it properly. It could become a problem. And then, of course, at the price point. Slightly longish answer, but I hope it answers a little bit of what people have in mind.
Got it. I think that kind of makes sense. And so just to make sure I have a decent understanding of your answer, that means at the early stage, especially in the beginning, a lot of the founders struggle when they don't validate, number one, the quality of their service, the way they reach their customers, and whether the customers are able to pay at the rate that they would like. And getting all those three things to work is the part where startups tend to fail. In your experience dealing with founders, do you feel founders are aware these are the three factors they need to focus on, or are there other approaches that they've taken that have not necessarily helped them achieve the results they need to?
I think, Nash, that founders have a very difficult life, right? And not enough is spoken about them, because founders have to deal with too many things, right? And I think that the best friend for a founder is to know this, right? That you're dealing to begin with. We can talk about all this as much as we want, but the primary challenge for any entrepreneur, much more in your early days, is how do you pay the bills at the end of the month, right? That's something that constantly is in their mind. So I can tell you that every founder who's on the call right now knows that we are halfway through the month and payroll is only 2.5 weeks away, right? Any real founder will know always how far the next payroll is. Any real founder, till they get to a certain scale or whatever else. So I think it's a little unfair to say that founders know and whatever else. But of course there are. So I think the odds are stacked up against the founders because they have to do so many things. So if they're methodical to be able to say that I'm going to take a half day off once a week to only focus on this, whether by myself or with somebody else or whatever, right? I think the organizing itself might help you think about this, because it's not something that you can keep thinking in the background, right? So you got to do a little bit around that. I think the market preparedness is a thing that works against founders as well, right? Where you're seeing some green shoots, but you're not seeing enough uptake is a tricky one, because it tells you that this thing works for some people, but not for some others, right? So I think those are the kind of enemies that I think. But what could founders be doing? I think that if founders were able to build some sort of a link between this and their cash flows, right? Because whether you're going to stay alive or no, right? Failure is basically when you run out of cash. It's a solvency problem. Unfortunately, it's made to look like many other things, which it is not, right? If you're going to be insolvent, it doesn't matter whether all the three were right. Whether your product was okay, the delivery was fine, but for whatever reason, you didn't have the capital, you weren't solvent enough, you have a problem. How do you link this into the cash flow is the only thing I think they can control. For example, if you are going to take 2 years to be able to find the kind of validation that you want, but you have only money for 1 year, in which case you're still lucky that you have money for 1 year, it's going to work against you. So I think either you find another way to be able to raise more money or to be able to fund yourself in some other form of action or whatever. That I think is the only thing that you can do. I don't think you can rush the process. Sometimes rushing the process is counterproductive, and I think it works against the founder and the product also, and the team, of course.
Got it. Thanks for that, Shashank. Now, Michael, I wanted to pose the same question to you. So, Shashank has brought up some very interesting points. From your experience, especially as an ecosystem builder, what have you seen is the difference between founders that are able to quickly scale in that first year, or founders who tend to struggle in that first year and may have difficulty in terms of sustaining themselves and getting to the next stage?
I think at first, founder sometimes is overconfident. That's the one of the, could say is good, is an advantage, but it's also a disadvantage sometimes. So you have to identify very clear on what you are going to do. What is your 5 years plan and what is your ultimate goal? When your goal is very clear and position is very clear, then I think during the process, during the journey, it's just a journey. No matter any challenges, it's a journey, but your goal is very clear. So I think this is a very basic so-called preparation when you're going to start a so-called projects. So positioning is very important, because during the journey you may have a lot of different idea in between your team. So you as a founder or co-founder, you have to do as Shashank mentioned, you have to do a lot of things. So then you may be affected by different point of view during that time. So how are you going to pull yourself back from the problem? Sometimes problem is really a problem, but sometimes a problem is a good answer for yourself to make it more clearer. Your position is very stable and the foundation is good. So I think you have to know that how to identify it and how to make it uh, another tools or weapon for yourself from all kind of negative mindset or solution or any idea. From there, you turn it into your own advantage. That would be, I think, current founder difficulty, because a lot of founder they easily absorb all these negative and give up, or they may absorb something wrong at that moment. But sometimes those suggestion or advice may not right at that moment for him. So he have to so-called identify all these issue by when you're going to deploy and implement, by when you're going to move on. So all these you have to very line up, so-called have a very good Gantt chart for during the journey. Otherwise, you will run out from your plan. Yeah.
Got it. I want to dig a little bit deeper into that, Michael.
Yeah.
Shashank, do you have something to add? Sorry.
Yeah, I just wanted to say that, Michael makes this very, very important point about mindset. I think as a founder, particularly for startup, you have to realize that in a small way, you're betting against the status quo, right? So the odds are obviously loaded against you, right? And therefore, and you're of course challenging the status quo, and therefore it's not going to be easy, right? And I think the point that he makes about resilience, I think, is very important. So I just wanted to say thanks to him for bringing that up, how clearly he did.
Yep. Very, very important to stay on track, especially like what Michael said, there's so many distractions, so many different voices that come in to give advice. And Michael, you brought up that the thing that helps filter and help structure all the different advice is having that very clear goal, right?
Yes.
And when you said founders are overconfident, they may have a goal, but it's not well defined, it's not very well laid out. So, for the benefit of the founders on the call, when you define like a very well set goal or a very well set vision, what does that mean? And how does that fit in the context of how they build their startup? How do they build forward while also giving them space to pivot, giving them space to adjust things? How do they set that goal and how do they set that vision?
I think for this, I just now mentioned about they need to have a very clear goal, all this stuff. At first, they're too much confident. It's not a problem. Importantly, the year doing so hard, you see, have to listen from advice from a right person, from right industry. So from there, you try to gather all this info, then you sit down again and think back why and how and by when you're going to do. So I think from here, which is easier for the founder to have a very good so-called movement. Yeah.
Got it. So I think as part of that, the next part of the conversation that I want to jump into is as the startups go on, especially startups in this cohort go on, they build their solutions, they might realize that they might need to make pivots, right? In order to make it to the next step, right? And for a lot of founders, that might feel like a point of failure, that they are moving away from what they were originally building. Or it might also be difficult for them to make that decision because of sunken costs, right? They've spent so much building towards a specific vision, making that adjustment is not easy. I wanted to get the opinions of the panelists, especially at this stage of their journey. If they're looking at pivots, how should they look at what is the right time to pivot versus what is the right time to double down? And when should they realize that, hey, this is something that's not working, they need a complete change? So with that, maybe previously we started with Shashank first. Maybe now we can start with you, Michael. How should founders look at that pivot?
At first, I think when come to this situation, he have to evaluate again on what he going to do or what he plan to do. So when come out the evaluation plan, confirm again your capital and financial able for you to move on how far your plan going to change later on. Because mostly all these changes may impact your financial. So from here, actually, you have to evaluate the whole thing, especially for the financial. Then from here, how much you're going to move on for the next changes. So your mindset have to very clear that each step you're going to change, each step you're going to lead, every single advice you're going to listen, it may cost your capital. So which one you're going to move on first? So prioritize is very important. Sometimes every single step is very important. So how are you going to balance concurrently? So all this is, I can't say which one is very important, but you have to make a very wide, wide thinking about your whole project. As Mandarin proverbs, we have a 天时地利人和. 天 is about the time. Oh, sorry, about the sky, the God give you. Second is 时 is the time. 地 is a location, the situation. 人 is the people. 和 everything is it concurrently can match up together. So all this you have to think widely. Don't just sitting there and thinking by yourself. Because thinking by yourself is the only way to narrow down your mindset. When narrow down your mindset, you only think that everything is negative. So if you think out of the box or think out in the sky, looking yourself on the earth, actually the problem can be solved. Solved. It's just a matter that different time or solve it slowly, but the other thing have to move on together. Then from here you balance up. I can't say any step. It's very important, but you have to choose the right one. Slowly, concurrently, have to do it at the same time. Because sometimes founder and the partnership together definitely have a lot of voices, but two of them or three of them, this key person have to be very clear who doing the external job, who doing the internal part. But it doesn't mean that internal part cannot disturb the external or external cannot disturb the internal. I can't say disturb, I mean understanding. Communication is very important. So without the communication and understanding each other, definitely you're fighting. It cannot last longer. Because you have your own friend, you have your own advisor, you have your own mentor, you have your own growing environment. So all getting together, whole founder, wherever C-level, all together. Then how are you going to bring this, your corporate, your startup, moving towards? So the position is very important. Your ultimate goal is very important. So that's my opinion.
Got it. Thank you so much, Michael. Like really zooming out and getting out of that microcosm of just your internal situation really helps to give you that context.
Yeah.
Shashank, would love to know your thoughts as well, especially when founders are in that really tough period where things are not going right and there needs to be a change that needs to be made, but it's very hard to figure out what that is.
Yeah. I think Michael's already sort of covered a good part, and I think he's also giving a framework that I'll slightly build on, and I'll add another layer, which is the investor's perspective. Right? So let's say that you've got angel investors, institutional investors, whatever else. I'm going to start from there. You have to remember, like Michael said, that's just one more perspective, right? At the end of the day, you are the founder. It is your company. It's not the investor's company. And I'm not saying, therefore, don't listen to what the investors are saying, but they are perhaps a very important voice, but they are not the only voice. In the end, the most important voice is yours, right? So I think that's something to bear in mind. One of the things that I found, particularly in early stage, and I always tell first-time founders in particular, that whatever investors say is not necessarily a call for action, right? sometimes investors believe that. I mean, I don't think that's a healthy thing, right? Because your take is as an investor and you put your money on the entrepreneur to begin with in the first place. So I think that's one. I think the second thing, which will then bring me to the final point that Michael was making, was what is it that you are going to pivot for? Is it because the product is changing? Is it because the market is telling you something, or what is it? I think knowing that is very, very crucial, right? What is the element that's going to change? And I'm not saying that it's never a good idea, but let's try something new should be adopted when you are very clear that that's what you're going to do. So you decided to go to the market, you're trying, it's not working, and you're not getting a very clear answer. So you're going to say, I'm going to do something new, right? But if you should know that I'm not able to hear very clearly and this is not working, therefore I got to do something new, right? Which then brings me to the point that if the market is giving you some sort of a feedback, are you able to pick up something either from your consumers or from some other voices, let's say tech, production, or whatever? Any pivot would mean that there'll be some changes from where you are today. And that has to be very, very operational. Do you have inventory, for example, or what do you have sitting with you? What happens to that, right? And that's the very brief reference that Michael made about the costs and influences that it will have, I think, on inflows. So does the pivot mean that you'll end up spending a lot more money before you start getting more feedback? Because that's what I assume you're doing, because you're starting a little bit new. In which case you need to think twice about it, right? But is there a way that you can tweak the messaging and start getting better feedback? Then that's an easier pivot to do. So I think the understanding about what's going to happen with whatever you have and whatever you're going to go. Let's just take something just slightly more manufacturing oriented or whatever else, where even if it's basic tooling of some kind that has been put together, right? Sometimes you might have just lined up a lot of packaging materials and that's going to go waste. I'm saying think very hard about that. Not that you should not change or pivot because I've got some packaging material sitting with me, but be aware of everything that is going to change because you're going to pivot something or whatever. And then the final point that Michael makes about people working together, I think is very crucial. So what I've found is that when there's a discussion going on, there's a lot of different viewpoints that come. But the operating failure of the team is to continue to discuss or second guess after a decision has been made, right? Let's just say that Nash and Michael and Shashank are in one team. We might have three completely divergent views. But for whatever reason, we have now decided that we are going to go after what Nash has suggested, for example. It's very important for effective teams to rally behind it as if that was my decision, right? I think this second guessing after you've launched is clearly something you were asking me early on about, what is it that founders need to watch for or teams need to. I think this is one of those things. Because I was doubtful, now that I'm rolling it, I'm already doing it half-hearted, in which case it's a sure recipe for disaster. So this idea about knowing, and then of course, the other side is what we call as paralysis by analysis. You're constantly analyzing and discussing, and early on, there's only that much. It's very, very gray. So you've got to be mindful. But once you've made up your mind that you're going to do it a particular way, everybody has to sort of pull in the same direction. Otherwise, and I think these are things that are very, very in the control of the founders, because this happens after you started getting some feedback and you're making the change internally.
Thanks, Shashank. Very, very insightful in the sense that as founders, sometimes you have to be able to agree when maybe the decision is not specifically a decision that you came up with, but once you make the decision, you have to commit, right? You have to do everything with your full soul. Being a startup founder is not easy, and doing it half-heartedly is not going to take you anywhere, right? I think the next part of the discussion that I want to get to, and a quick reminder to the founders as well, while we are doing this discussion, the floor is open for you to not only just ask questions, but if you would like to pose your own current startup situation and ask for advice from the panelists, you may do so as well. Just do take advantage of the situation. What's one hard truth, Shashank and Michael, that you would want to share with founders, right? In terms of the difficulties in their journey and how they've developed their approaches, what's one hard question founders should ask themselves in order to make sure they're on the right track? Actually, we may be able to get to that question a little later because we do have a question from Carol from Terra Deca. Hi, Mr. Shank. In your opinion, when is the right time for startups to look for investors or receive investment? At what part of their journey should they be looking for that?
Okay, I'm going to break this up into two different parts. I think early on, your biggest friend is cash and your biggest enemy is time, right? So in that sense, you should take as much cash anytime. I'm always a big fan of businesses, probably till they're getting to private equity, having a fair amount of cash on their balance sheet. I think it just changes everything. But I think that more than the right time, I think the right investor is the question to ask, right? Does the investor have, I mean, I hear so much about due diligence that gets done on startups. It's appalling how no due diligence gets done on the investors, right? And I always say that it's the only thing that businesses or entrepreneurs buy, in which case they behave as if they are the people selling, which isn't true. You are as much a part of the transaction as the investor is. Remember one thing, entrepreneurs have built businesses without investors. No investor ever made money without an entrepreneur. I know it sounds philosophical and all of that, but please bear that in mind. So I would say that you should raise money as soon as possible. I don't agree too much about, you'll dilute this much, that much, or whatever else. If you're successful, it's not going to matter that much. If you're not going to be successful, it's not going to matter that much either. So I'm not a big fan when people haggle over 3% or whatever. If you're doing private equity, then I can talk about it because it's a very different story. Early on, first 3-4 rounds, it's the kind of people that you're trying to get in, which is the most important thing. I think having cash is very helpful, but if you're going to have an investor who's going to tell you what to do, I would say that's an investor you've got to avoid for a reasonably long time till you've got counterbalance on your board. Carol, if there's a follow-on, I'm very happy to answer that.
Michael, is there anything you want to add on in terms of your perspective when it comes to, especially for early stage founders looking at getting an investment?
If you don't have cash enough, don't start your startup. Really. Because your dream, you need capital to generate. It's very so-called, it's very cruel, but it's a reality. So cash is very important anytime. When you think about or already started a startup, then better before you try out, you have to get ready every single moment. Well, prepare yourself to pitch. Okay, I think that's the things. But don't too much rely on pitching to get money coming in. Try to use your project and make the money from your projects. Then investor will look at it, there's a revenue generation, then your money will come in automatically. So a lot of founder or startup, they only think I want to get money from government, from investor, from any one of the cash, sugar. So, but I tell you that not last longer. It's not a sustainable method. So better is how to make your project generate revenue. That's very important. Yeah. So I believe all those investors, they are smart enough. They are not looking your dream because your dream cannot materialize. You see? So cash is very important anytime. Yeah.
Thank you so much, Michael. Thank you so much, Ashank, for those perspectives. Really adds a lot, especially with founders looking to raise funds, especially at the early stage in Malaysia. It's not particularly easy, but at least having that context, it gives them a better idea of how to approach things. So back to the previous question, hard truths. What question that should founders ask themselves more? What truth should founders confront more on their journey? I think Michael added one very good hard truth there. Don't start a startup if you don't have money. Right? If you don't have the capital, it's going to be very difficult to move forward, to have that perspective. But what other things do you think founders should be real with themselves with as they approach that journey? Shashank, maybe we can go with you first.
Yeah, I think I'll just build on what Michael said, which is first off, how much cash do you have and where can it take you? Right? I've seen that we went down because we were 1 week away from being able to raise money. I mean, that I don't know how to make sense of that. If you were really 1 week from being able to raise the kind of money that you needed to get on, and you were not able to last for 1 week, then there's some problem, right? Fundamentally, because you were so close, you know how to get there. So something was off in some form or whatever. So I think that's, and because it gets very difficult, I think the timer is something that I've seen founders tend to start ignoring a whole lot. I also think that it's very difficult, but it's a generalization, and I cannot think of something very specific. But doing the same thing and expecting it to deliver different results is something that I think founders tend to do a lot. They often think that, okay, we didn't do this, and there's only a very marginal change, and it's not going to give you something different because either they are uncertain about pivot, they don't know, or whatever else. And I think that's very real. So like I'm saying again and again, that you're betting against a very well-established market, right? So I think this recognition that you've gone out there and you're pursuing something really very massive. Any startup founder is pursuing something truly disruptive, which is not easy, right? So I think you should recognize that the odds are against you, that, maybe this is not the time, place, whatever else. So therefore, trying to do more of the same and somehow hoping that it will lead to something different, I tend to see this as something that goes on. Let's try this for another 2-3 months or something like that. I would say those are two things that you have to avoid. And the second one usually is a reflection of just being too enamored with whatever your thesis was. Right? So you came in with a thesis. If your thesis is not clear, you're not going to get anywhere. But you're so enamored with your thesis that you can't change anything, and that becomes a problem.
From our experience as well at Beyond4, one of the key perspectives we always share with founders is love the problem, never love your solution, right? Because especially as you get very attached to how you solve your solution, sometimes you become a startup in search of a problem as opposed to a startup actually solving a problem. So that's a very, very key point for founders. Michael, just wanted to see if you have any other things that you would want to add on to this point.
Other than the cash, asking yourself about the cash, we may ask also, how many of your team members going to follow you when during the start time? Are they agreed your idea or not? If when start the time they have a lot of direction already, better make it clear, line up all the issue and different thinking. Then how to synchronize into one direction. That's very important. Elsewise, when start already an issue, is a problem. Better don't start. So I think this is one of the very important element that many founder and startup facing the issue. When come to this table, everyone have a dream. They want to make something else, something different, but the mindset may be different. So this, I think, you have to put on table and discuss well before we kickstart. Other than cash, after cash, these are the team that you're going to build. So are they going to follow you for the next 5 years or 10 years? Are they going to make it happen together? If no, don't start. If yes, how? Strengthen it. Not to weakening it. So you have to strengthen it. So how to move on? I think this is the other very key things you have to ask yourself. Yeah, if yourself have a very solid mindset, I don't care. Whoever you are, if you want to go, you go. I will grab back whatever I want. I will grab back whatever you own it. I buy back. I still will move on. And then different. Okay, then different. But don't too over lah, because it's a team. Okay, yeah. Sometimes too strict, you may lose your friend. So better talk upfront first. Discuss upfront first. Yeah, that's it.
Thank you, Michael. I think we have a question from Hujat. Hujat, you can unmute your mic and you can put forward your question if you'd like.
Yeah, thank you. I was just wondering, from your experience, Shashank, as a VC, what kind of pre-money valuations are you sort of seeing, like from the startups that you invest in India or in Malaysia? And also, how do you record and account for like triple bottom line, like not just P&L, but also like the social or impact indicators? Thank you.
Okay. I'm going to sort of slightly controversial answer. I think that the valuation expectations are misplaced. And I have a very straightforward way of trying to communicate that to the entrepreneurs. And I tell them that, take me through whatever valuation you want to start off with. People are asking all kinds of numbers. And then I say, okay, take me through 4 more rounds and tell me what valuation will you get to, so that you can promise me something somewhat reasonable that I can live with. Let's talk about that, right? I can tell you 9.99 out of 10 times that math just doesn't add up. You're suddenly telling me I'm going to be worth whatever 450 million or some such number at the end of 4 rounds to be able to make sense to anybody, right? And I think that that's a part where entrepreneurs need to be mindful. I'm not saying you've got to give away a lot of your company, but I think you have to also recognize that for investors, in the end, we've got to make money, right? So that's a very important element to think about. That's point number 1. And I'm not going to go into particular numbers, like I said, because there are all sorts of numbers that get bandied about or whatever else. As far as double bottom line and triple bottom line are concerned, we have a very explicit method, which is that everything must come from the same action. One of the challenges that we have found is that companies tell us, particularly because we're in social impact, saying that this is what I'm going to do, and this is going to give me some social impact, which is something different from what our primary activity is. For us, we like to keep it extremely simple, which is whatever is the first level transaction, which is provision of products, services, platform usage, whatever that you want to do, must be very clearly identifiable as the lever for social change. And let's say climate, if you want to put the third element on that. If that's not the case, then I think you are setting yourself up for a conflict where you'll end up doing one and not doing as much of the 2 or 3, or you're trying to chase multiple goals, which I think is like trying to ride too many boats, which is never going to work. So for us, if it's not the one action that delivers whatever outcomes that you want to promise, we do not want to accept that it will deliver those changes. It's an additionality. It maybe happens, maybe doesn't happen or whatever. But we should be able to agree with the founders that the same action will give us both social impact or climate impact and economic outcomes. To the extent that our social measurement metric is to put a dollar value to every transaction for the social value delivered, right? So that we can discuss that internally. And that's a slightly longer conversation, but that's worked for us for about 15 odd years. And we may use other methodologies for social impact measurement, but this is not one we are going to give up in a hurry.
Awesome. Thank you so much, Shashank. Appreciate that. I hope that answers your question, Hujat. All good?
Yeah, thank you.
All right. With that, I think we have just a little bit of time left. If there's any other founders that have questions, now's your time to ask the final question. All right. If we do not have any questions from the founders, then I will take the question. I think the last question I would like to ask both our panelists for today is, if you had one piece of advice that you would give to founders at this stage of their journey, a lot of the founders are just at the point where they've developed their MVPs and they are going towards validation, right? What are things they can do right at this stage to make sure that they are set up in a way that allows them to take full advantage of the startup ecosystem? What puts them in the best position to get where they want to go? So I think this time I can start with you, Michael.
Okay. Since you already joined the Beyond 4, then fully utilize the platform. Ask any question from the floor, especially those mentor and also the advisor, because they may have a lot of experience. And from there, ask their so-called advice on what on the so-called ask them to challenge your startup. From during the period of challenges, they asking you, from there actually you try to adjust your direction. So try to re-evaluate your startup from there. Always make yourself listening to others people, because this is very important. Then from the ecosystem itself, I think Beyond 4 have a very good structure from that in the ecosystem. So they have a very good team to advise you guys. So I think that's my simple advice for the floor. Don't give up. I think there's nothing simple from the start. Everything is very difficult. So just take it easy. So I think the foundation is really very, very important. So just try to hit the wall. If you don't hit the wall, you don't know how pain it is. So no pain, no gain. It's very, always remember, no pain, no gain. You are young. Don't afraid of failure. This partner cannot change. This idea cannot change. This project cannot just change, because every change make you grow. Yeah, make you grow. You may come by the next session of Beyond 4 also can, right? You can continue and enjoy the new session. Yeah, that's it.
All right. Thank you so much, Michael. Shashank?
Yeah, there's going to be pain. There's no doubt about it, right? Otherwise, it's not fun. And if you're not ready for that, I would say there's nothing wrong with it. Please consider doing whatever else that you want to do, and that's fine. The other, I think, is this is the long game, right? And, we always hear about all these things, but the one that has stayed in my mind is that, overnight success takes about 10 years, particularly if you're building a startup. So I think, know that this is the long game. The second thing I think is, in your very early part, your singular goal has to be to stay alive. If you don't stay alive, you will not be able to tell the tale, right? So, like Michael said, if you don't have the resources, don't get started. So time yourself well. And there are other ways. I mean, there are very controversial ways, but I've seen entrepreneurs that initially I was very uncertain about, who did something on the side, either to keep themselves going or whatever else, right? But it turned out nicely for them. But I think that they were the people that understood it as the long game, that nothing's going to change in 6 months. I don't have an idea that is going to be taken away by somebody, because I think we all know that execution eats strategy for breakfast, right? So if you have that kind of conviction, if you know what you're playing for, I don't think you'll have a problem. But I think it's not something that you can say, let me give it a go and see where it goes. I think that's not a good thing, particularly for your teammates. Because if you're ready to step away, then I think you're doing disservice to those who take a chance on you. Most people think of investors taking a chance on the entrepreneurs. I actually think of your early teammates taking much bigger chances on you, because they came in before the investors came in, right? So, and I think that's personal credibility and reputation at stake. So I think remember that. Remember, it's a long game. It is going to create pain and difficulty, but that's what it will deliver serious outcomes. But I think thinking about how are you going to stay around is very, very important. And one final point I think is, in your math, please remember that investment and income are two totally different things. The number of people that I end up speaking to who are telling me that they're looking for an investment, basically because they don't have income, right, is just astonishing. You have no idea what a large number of people who tell me that I want to raise money, and they tell me it's because we want to grow and I want to do this and that or whatever else. But you look at the math, it's very clear there's no income. I just want to keep going for some more time, and therefore I need cash. and therefore I think it's investment, right? So I think it's not easy. I know as an entrepreneur that you always think this will happen and then I'll get a lot of money or whatever. So I would say if you can somehow find a way to do that. And then finally, to Michael's point, please use the benefit of advice that comes your way. The only one thing I would say there again from my experience is it's most exciting when the question is very pointed. The lesser or the more general the question is, I'm not sure how to respond to that and how relevant my advice might be. So I think, what do you think about this? I mean, it doesn't matter what I think about it, right? Why am I giving you that advice, right? So to me, I'm not able to figure out what is my relevance in that conversation. So for me particularly, if I don't know what the answer is, that's also okay. But I like pointed questions, and I think it will save you a lot of time, because one of the things about this whole mentorship business is that mentors seem to know everything, which I completely disagree with. They're relevant for a particular thing. Please use them for that.
All right. With that very explosive piece of sharing and very honest piece of sharing, I think we can bring our mentor sharing to why startups at an early stage fail to a close.